Hi folks, Trisha Curtis, CF Petroners and host of the Petroners podcast. I am live again in Newcastle, Wyoming. These are crude oil storage tanks behind me. I thought I'd show a picture of this just because I love that they show on the back of this fueling the Black Hills and Wyoming, which I think is awesome, and the Black Hills and Wyoming, because that's literally what this refinery is doing. But this is the refinery behind me. These are crude oil storage tanks, and the reason I wanted to show this was because today is July 25th, 2025. Right now we're seeing oil prices at $65 and just literally $65, almost flat for WTI, and $68.33 for Brent. And so if you look at the headlines on CNBC or Bloomberg, they're saying that oil prices are reflecting economic realities in the U.S. and China. And at the same time, we have the stock market just booming to all-time highs every day. It's been clipping records this week, and that's on the back of earnings, largely from tech stocks, largely from chips and Nvidia and those stocks, and looking at AI. And I feel like you can't have it both ways, right? You can't have a booming and ripping stock market and have an underlying weak economy. And what oil prices have been really telling us since the end of last year, folks, when oil prices were $69 a barrel, was that there was some unsettlingness, there was some weakness in the consumer, some weakness in the economy. We are not seeing oil demand ripping. We're certainly not seeing it declining either. And that's what we're seeing with this $65 oil. I absolutely still think it's oversold to a degree, at least by a few dollars, because we have so much geopolitical risk and don't have that premium in the market right now. That being said, I have the reason I wanted to look at these storage tanks as well and have them in the background is because I have been looking at and updating 2024 data, the Energy Institute, formerly annual BP data for oil consumption, natural gas consumption, total energy consumption. And what you see is that in China, we have 92 exajoules of coal demand. That is on absolutely record highs. It just keeps going up every year. And it's 92 of 165. So if you think that China is going green, you're wrong. If you think that China is reducing its coal consumption, you are wrong. China now has over 10,000 terawatt hours of electricity capacity, of generation capacity. That is a massive amount. That's over 1/3 of the world's power generation capacity. We upticked ours a smidgen, but not enough to compete with China. We're still half of their power generation. So it's refineries like this, it's the reality that crude oil demand is steadily increasing. And I just want to remind folks that it was during COVID when these storage tanks filled up massively, right? And when you look at that oil demand and you look at it historically, it was that period during COVID where we had a dip in oil demand globally, and then it recovered. But it was that time in that period in 2020 when everyone changed their scenarios and said that in fact we'd actually peaked demand in 2019. The reality is that that wasn't true. We did not peak oil demand in 2019. And while oil demand is not going up 5 million barrels a day each year, it is steadily rising and increasing. More impressive, though, is the steady increase in demand growth in natural gas consumption, which is about 400 BCF a day globally. And the U.S. is exporting 15 BCF a day. So there's a lot going on in the market and a lot to appreciate from a historical perspective. And the weakness right now, currently, that we're seeing at the 65 handle for oil prices. So with that, folks, there's a lot in the queue. I recorded a recorded a podcast with Jason Isaac with the American Energy Institute. This was a very China-heavy focused podcast that we did earlier this week. I can't wait to drop it, but there's lots coming in the queue, folks. Can't wait for you guys to listen. Please listen to the latest Petroners podcast, episode 136, with Mike Howard on everything midstream. So talk to you soon, folks. Bye.